Welcome to Dinar Daily. We are coming to you with a breaking news story that has sent seismic waves across the global financial landscape. In a move that many have anticipated for years, the Iraqi Gazette has released an official, comprehensive guide detailing the process for exchanging the Iraqi dinar, an event that has long been the subject of rumors and intense speculation. This is not just another piece of bureaucratic paperwork. It is a clear and calculated signal to the world that Iraq's currency reform is moving from the planning stages into the active execution phase. For global currency holders, especially those in the United States, this guide provides a tangible roadmap for how, when, and where to exchange their dinars for US dollars. This is an unprecedented development that provides clarity and a structured process for participants, particularly those often referred to as Tier 4B investors. For a long time, the discourse surrounding the dinar has been filled with conflicting information and unverified claims, creating a climate of uncertainty for many. The new document from the Iraqi Gazette changes all of that by providing a credible and authoritative source of information. It outlines a meticulously organized, 7-step process designed to ensure the integrity and legality of every transaction. This structured approach is a key part of building trust and providing international investors with a standardized procedure. Notably, the guide gives logistical priority to US-based citizens, acknowledging the long-standing partnership between America and Iraq in financial and security matters. The first and most crucial step outlined in the guide is the authentication of your physical Iraqi dinar notes. According to the official instructions, all notes must be verified either by a licensed currency dealer or directly by an international bank that is formally registered with Iraqi authorities. This authentication process is a vital security measure. Its purpose is to ensure that only the modern, post-2003 dinar notes, which feature specific watermarks, metallic security strips, and contemporary anti-counterfeit serial codes, are eligible for exchange. Any older notes from the pre-2003 era, often associated with the Saddam Hussein regime, are explicitly labeled as invalid and will not be redeemed under any circumstances. This authentication requirement serves a dual purpose. On one hand, it is a necessary safeguard to maintain the financial integrity of the revaluation process and prevent fraud. On the other, it protects investors from inadvertently holding counterfeit or outdated currency that has no value in this new system. For U.S. investors, the guidance is clear. It is highly recommended to start this verification process immediately. Acting quickly on this initial step could determine whether you are part of the first group to complete their redemptions or if you face delays in later rounds. Proper documentation of the note's authenticity is positioned as a critical factor for a smooth experience. Following the successful authentication of the currency, the next mandatory step is to register through a newly launched online portal specifically for this purpose. This digital platform is overseen by Iraqi regulators in collaboration with various international banking institutions and acts as the official gateway for all foreign dinar holders to schedule their redemption appointments. This registration is not optional. It is a firm prerequisite for anyone seeking to access the exchange system. During the registration process, investors will be required to submit personal identification, such as a valid passport, along with documented proof of how they acquired their Iraqi dinar. The registration process also requires a current bank readiness letter from a participating financial institution, which confirms that the investor has an active account. The Iraqi Gazette stresses that this portal is a one-time registration mechanism, specifically designed to prevent fraud, duplicate applications, and other security risks. Investors are strongly advised to meticulously prepare their documents in advance to avoid any submission errors or rejections that could cause significant delays. By completing this step, a verified global database of legitimate currency holders will be established, setting the foundation for efficient and secure redemption operations upon successful registration and approval of their submitted documents. Investors will receive a unique Tier 4B appointment code. This code is more than just an identifier. It functions as a scheduling key. With this code in hand, participants are instructed to book a private or bank-based exchange appointment. The guide specifies a tight window of 24 to 72 hours for scheduling, depending on the investor's geographical location and the volume of other applicants. The scheduling system is designed to be geographically targeted, using the investor's registered zip code to assign them to the nearest available exchange center. This logistical approach is meant to ensure efficiency and prevent overcrowding at any single location. The narrow scheduling window highlights the importance of being fully prepared and ready to act quickly. If an investor were to miss this critical opportunity, it could result in significant rescheduling delays, potentially causing them to miss out on preferential contract rates or other early settlement benefits. This step reinforces the need for investors to be organized, flexible, and ready to move forward without hesitation once they receive their unique appointment code. The fourth step is the in-person appointment itself, where investors must bring all required materials to the designated exchange center. These materials include their physical dinar currency, the official registration identification, the appointment confirmation letter, and proof of an active, verified bank account. At the exchange site, a multi-layered verification process will be conducted, including a physical check of the dinar notes, biometric security checks like fingerprint or retina scans, and a final document validation. The Gazette's guide makes it clear that these measures are in place to protect investors from a variety of threats, including fraud, identity theft, and the infiltration of counterfeit currency. The exchange centers are described as secure, high-end banking facilities with armored security and restricted access to ensure both confidentiality and personal safety. This phase is critical as it serves to finalize the legitimacy of the exchange, ensuring that all transactions are accurately recorded and comply with international financial standards. The implementation of biometric verification is a notable feature, providing an absolute layer of certainty regarding the identity of each participant before any exchange proceeds are distributed. This level of security is a testament to the serious nature of this financial event. One of the most anticipated features of the guide is the introduction of what are being referred to as contract rates. During their appointments, investors may be presented with two distinct options. They can either accept the prevailing international market rate for their currency, or they can opt to negotiate for a higher, more favorable contract rate. This higher rate is typically offered to investors who agree to sign a non-disclosure agreement, NDA, and participate in a structured asset conversion program. These contract rates are expected to be available primarily through major Tier 1 and Tier 2 banks like JP Morgan Chase, Wells Fargo, and HSBC, which have established direct partnerships with both Iraqi and U.S. authorities. This provision introduces an element of strategic choice for investors. While a contract rate could yield significantly higher returns, it may also come with certain restrictions on liquidity and the ability to disclose the details of the transaction. Investors must weigh the advantages of having immediate access to their funds against the potential for a greater financial upside that comes with committing to contractual obligations. The guide strongly implies that this choice is both a financial and a personal one, requiring careful consideration and, ideally, consultation with a trusted financial advisor to determine the best path forward. Following the decision on the exchange rate, the next critical step outlined in the Gazette is whether to receive a lump sum payout or a structured settlement. Under the structured option, investors can choose to have their funds dispersed over a period of 5 to 10 years, which may include added tax incentives and interest-bearing features. This approach is designed to both stabilize global financial markets by preventing sudden shocks from a massive influx of liquidity and to provide investors with a more secure, long-term wealth management plan. The choice between these two options is highly personal and has significant implications. Lump sum exchange offers immediate access to capital but can also subject the investor to higher tax liabilities and the inherent risks that come with managing a large, sudden windfall. In contrast, structured settlements provide consistent, government-backed returns, which may be particularly appealing to those with a focus on long-term wealth preservation. This step highlights the importance of strategic planning beyond the initial exchange. The guide emphasizes that this choice should not be made lightly and that professional consultation with financial advisors is essential to align the payout method with individual financial goals. The final step in the process, and one that the guide heavily emphasizes, is compliance with all taxation and reporting requirements. While Iraq has stated it will not levy taxes on foreign holders, U.S.-based investors are fully responsible for reporting all gains to the Internal Revenue Service, IRS. Depending on the chosen payout method, profits could be classified either as capital gains, with a tax rate typically ranging from 15% to 20%, or as ordinary income, which could be taxed at a much higher rate, potentially up to 37%. This makes thorough tax planning an absolutely essential part of the preparation process. The Gazette's guide strongly recommends that participants consult with certified tax attorneys or CPAs well in advance of their exchange appointment. Proper tax planning is not just about mitigating risk. It can also open the door to strategic deductions, trusts, or asset protection vehicles. Failure to report correctly could result in significant penalties or even legal action, which could ultimately erode the very gains that investors have waited years to realize. This final step is presented as the culmination of the entire process, where the fruits of the exchange are properly and legally secured for the future. The discussion surrounding the Iraqi dinar's revaluation has increasingly moved from being a speculative theory to a tangible, actively managed financial rollout. Esteemed experts in the foreign exchange markets, such as Dr. Harvey Blackwell and Anna McMillan of J.P. Morgan, have gone on record to confirm this shift. They assert that the publication of this official guide by the Iraqi Gazette is the final signal that a coordinated, carefully orchestrated process is underway. Both experts have underscored the importance of preparation, including establishing proper legal, accounting, and trust structures before any exchange takes place. They have also warned that timing will be critical, and those who are unprepared may miss out on the most advantageous contract rates. For American currency holders, the guide reiterates the strict need to comply with all IRS and U.S. Treasury guidelines. It specifies that all post-exchange funds must be accurately reported using specific forms, such as Form 8949 and Schedule D, and that Form 8300 is required for any cash transactions exceeding $10,000. Financial advisors are strongly recommending the use of bank wire transfers instead of physical cash during redemptions to ensure a clear and traceable record, which can help in case of an audit. The advice from experts is unanimous. Tax-efficient structures like trusts or LLCs should be set up beforehand to ensure smoother reporting and protection of assets. As of August 2025, there are multiple reports of major U.S. banks now offering private appointment desks for IQD exchange services, a significant change from their past silence on the matter. Sources indicate that Tier 1 banks like Chase, Wells Fargo, HSBC, Bank of America, and Citibank have created internal RV desks dedicated to assisting private clients with the exchange process. Fifth Third Bank has also reportedly joined these ranks under slightly less restrictive conditions. These services are said to be concentrated in regional hubs across the U.S., including Texas, Florida, New York, and California, with strict compliance protocols in place to ensure a secure and orderly process. While the official Central Bank of Iraq, CBI, exchange board still lists the dinar at its current rate of roughly 1 IQD to 310 USD, there's a notable increase in gray market trading. This surge is attributed to reports of pre-contract arrangements being honored internationally. Analysts monitoring confidential Tier 1 exchanges have suggested that private groups are already seeing rates ranging between $1.32 and $3.71 USD, although these figures are subject to strict non-disclosure agreements. This activity suggests that the public rollout of the revaluation could be much closer than many initially anticipated, fueling interest and anticipation among investors worldwide. According to financial models circulated by institutions like the and the BIS, the revaluation is not expected to be a single event. but rather a staged, carefully managed release designed to prevent any major disruptions to the global market. Forecasts suggest that within the first 7 days of the revaluation, exchange values could settle between $1.32 and $2.50 per IQD, providing early redeemers with an opportunity to maximize liquidity. In the following weeks, rates could potentially rise even further, possibly reaching up to $3.71, although access for Tier 4B participants is expected to close quickly during this period. Long-term projections anticipate that the official public market rate may stabilize between $1.12 and $1.42 USD by the fourth quarter of 2025. The potential for a domino effect has also become a major talking point in investor circles. The Vietnamese dong VND continues to garner significant interest, with its official rate standing at approximately 23,700 VND per USD. However, pre-exchange groups have reportedly circulated information about possible revaluation targets for the VND, ranging from 27 cents to 71 cents USD. Some private contacts have even leaked potential settlement rates between 47 cents and 57 cents, which adds to the credibility of the revaluation narrative. Vietnam's ongoing industrial growth, new trade agreements, and recent reports of China reducing its dong holdings all contribute to the foundation for a potential currency reset. Redemption centers for the VND are now being forecast to open in major U.S. cities, likely in the fourth quarter of 2025. Meanwhile, Zimbabwe's currency reformation is expected to follow a unique, gold-backed redemption model. This model would offer holders of the Zimbabwean dollar (ZWL) bond notes a structured exchange opportunity. Current policies indicate that redemptions will only be honored for individuals and institutions who registered their bond notes before January 2023, creating a limited access window for participation. Projected exchange rates are said to be between 1 cent and 21 cents per ZWL, depending on structured equity agreements tied to the nation's gold reserves. This system is reportedly being closely monitored under IMF guidelines, as Zimbabwe aims to directly link its redemption to internationally recognized gold baskets for American currency holders preparing to participate in this historic financial event. A step-by-step checklist is now more critical than ever to ensure a smooth and compliant exchange. First, it is imperative to verify that your holdings are authentic. Coast to 2003 Iraqi Dinar notes, as any older versions will not be honored. Next, pre-registration through the official exchange portal is mandatory, followed by the scheduling of a secure appointment at an approved Tier 1 or Tier 2 bank. It is also highly recommended to consult with a certified public accountant (CPA) well in advance to prepare for all reporting obligations and long-term tax planning. During the exchange, you must decide whether to accept a wire transfer payout or opt for a structured settlement program, both of which have their own unique benefits and considerations. If a contract rate non-disclosure agreement (NDA) is offered, it is important to ensure it is signed, securely stored, and fully adhered to. Above all, you should only utilize the official Iraqi Gazette-approved channels, as offers from third parties remain high-risk scams. With the release of this official guide, what was once a subject of widespread speculation has now entered the realm of institutional fact, and the window for maximizing opportunities may not remain open indefinitely. Acting with wisdom, security, and a sense of urgency will be the difference between realizing short-term gains and building long-term generational wealth, whether your portfolio includes Iraqi dinar, Vietnamese dong, or Zimbabwean dollars. The necessary tools, policies, and timelines are now available to guide you through the process. The only decision that remains is how quickly and effectively you will act before the contractual and public windows close, leaving those who are late to the process with significantly reduced returns. This is a rare financial inflection point, and being adequately prepared is the key to participating safely and responsibly.